The euro has hit a fresh 4-month low against the dollar as political uncertainty in Greece fuels speculation it could be forced to leave the euro. To talk on developments in the Eurozone and what indicators to watch out for, we're joined from our Cape Town studios by Tony Bell, Head of Multi-Asset Fund Managers at Vunani Fund Managers. So where do we hide with the Greek debacle on the horizon, Tony?
Well, I think it's important after we spoke last time. Can you still hear us, Bronwyn?
Yes, we can, Tony.
Good, got you. Okay. After we spoke last time, a couple of important developments have taken place. I think the election of Mr. Hollande is a very important and very key development because it's moving the debate away from pure austerity into a framework that talks about putting something else on the table, pro-growth. And I think what we saw in the markets over the last 24 hours really was a case of extreme brinkmanship between the Greeks and the Eurozone, where a lot of uncertainty exists around whether the Greeks would be able to form a government and whether they would be able to live within the Euro accord. But I do think compared to a month ago, we're starting to see a lot more of a progressive debate around a more holistic solution. I attended a conference recently in Cape Town where Stiglitz, the very noted economist, referred to austerity as something akin to medieval bloodletting. And the conclusion once the patient had died was that you didn't let out enough blood. So I think we've got a slightly more balanced approach, and I'm hoping that we move towards a more inclusive and logical solution to the Greek situation.
Tony, but I think the question is, from an investment point of view, you've got to do one of two things. The one is you've got to run and hide, or the other is you're going to say, you know what, these guys are going to play brinkmanship and then it's actually going to come out successfully. I need to actually buy these things when they're cheap. Which part of that do you fall off?
Well, what we look for when we're investing client money is we've really got, as Clem Santa would say, 3 signposts that we watch. The first one and most important is interbank rates. You've got to have a look and see whether the banking system is still functioning correctly and fluidly. And I think the ECB has done a huge amount to rectify what was a very, very precarious situation at the end of last year. The second thing to watch, which does worry me a little bit at the moment, is you're finding bank deposits leaving the Eurozone. Greece, Spain, Portugal, bank deposits are leaving, and I think investors are really hedging their bets. And that's creating a lot of urgency in the debate around an all-encompassing solution. And then the third thing to watch is the price of credit, what's happening to bond yields. And what we've seen happen is that the ECB really has taken out a lot of the risk associated with the banks, and it's up to the politicians and the policymakers now to sort out an appropriate framework for the sovereigns. What we look at from stock picking perspective is really to find those stocks that offer the potential of very good returns over the next 12 to 24 months, but with a high margin of safety, looking for stocks with very low PEs, with dependable earnings growth, and with a high margin of safety built into the value. And the ones that I came up for discussion tonight, they might sound a little bit left of field and out of the consensus thinking, but certainly with the pullback we've seen in Exoro, that's looking very interesting. The stock's trading around 195. Earnings growth is going to be very good, trading on a forward PE of around 6.6, which is undemanding. The type of business Exoro is in, mineral sands and the coal business. The prospects for both look particularly good. But as I've said on the show before, it's the mineral sands part of the business that's hugely exciting. So that's one interesting stock.
Tony, before you go on, do you have a target price?
Sure.
On Exoro?
Yeah, we got a target price of about 265 for Exoro.
Sure. Vickers looks as though he's going to go out and buy Exoro tomorrow. You must look at the expression on his face.
Yeah, I've always thought about it as mostly a coal stock. So if Tony's more excited about the sands than the coal, then
yeah,
is something that
the sands are becoming increasingly more interesting because you've now got Namakwa Sands, you've got the Australian operation, and you've got the KZN issue. the basket of products that make up the mineral sands group, the rutile, the zircon, and the titanium, those prices are up over 100% in the last year, and management is guiding for higher earnings in the year ahead. So we're looking at about 34% earnings increase for the year ahead, and the company is generating quite a substantial amount of free cash flow with a fairly low debt position. So it's the type of metric that I look for that I find reasonable degree of surety in this sort of environment.
Another stock that you've thrown forward to as a good place to potentially hide is BHP Billiton. Trading, I stand to be corrected, but around 233 Rand.
Yeah, we've got a price target of the low 300s for that. Billiton presents a slightly different fundamental position in the sense that a large proportion of their earnings is tied to the iron ore cycle, and we know that there's a lot of capacity coming on stream, but the business is very, very cash flush, very significant cash holdings on the balance sheet, and so really what you're buying into is one of the lowest cost operators in the various sectors that they have product in, coupled with a very strong balance sheet, and that's an appealing place to hide in this sort of environment.
And let's move on to Old Mutual. Now, interestingly, I've heard a couple of fund managers of late who are still holding on to the stock at around 18, 19 Rand, hoping that it's going to go to 25 Rand. Is that a reality? Tony?
Yeah, I guess I'm in the camp of the same hope. We've held this for quite a while. It was a little bit of an obvious sitter at around the 12, 13 level with embedded value much higher. Listening to management, the prospect of Old Mutual becoming more of an emerging market play is interesting because that is where a lot of the growth is. I do think it's a little bit of a crowded trade at the moment, probably above the 20 Rand level. We would look to exit the stock. Favor Discovery over and above Old Mutual beyond that level, simply because I think the management is driving harder, they're a lot more innovative, and there's more value being created for shareholders in Discovery than Old Mutual. But I do think that for the time being, Old Mutual still offers a little bit of upside.
I think that there may be a little bit more upside, but we don't like to be the last people to sell. We were in the stock at the 13 Rand level because we thought it was undervalued, but we don't really think that Old Mutual is a fantastic company long term. So I think your comment about other companies basically being better managed in principle, I think Old Mutual made a complete hash of it a couple of years ago. They fixed most of the things that are wrong, and therefore they've returned to it, but I don't think they've got the initiative to really take it forward from there. So in terms of the rotation we were talking about just now, from financials into other stuff, we're selling Old Mutual to fund that.
And Tony, just a response there, but we're running out of time, and I quickly want to get your view on Investec, because I see that's another place where you think we should be heading.
Yeah, the other two stocks that I had, slightly more contentious, Investec and Telkom, both follow a very similar theme. Management in both cases have destroyed quite a significant amount of value. Investec's interesting from the point of view that many of the pressure on many of the European banks is to contract their balance sheet. Because Investec doesn't enjoy the full support of the ECB, it's had to hold a lot of excess reserves. And in a marketplace where you do have sort of two halves making up the whole, with trade finance becoming quite an increasingly problematic issue for the European banks as they shrink their balance sheet, the value proposition Investec might look quite interesting. In the case of Telkom, just a very quick comment, you know, management is doing prospectively going to do the deal with KTC. Again, if management just stopped destroying shareholder value, there's a lot of free cash flow, and if that's put into a fixed line business that becomes a lot more efficient, with data being a more important part of our lives, it could potentially unlock some value up until the mid-30s.